Good afternoon, ladies and gentlemen. My name's Nick Treble, and on behalf of my colleagues, may I welcome you to the 173rd Annual General Meeting of the Saffron Building Society. As you can tell, we're conducting this year's AGM on a hybrid basis, with some pre-recorded presentations and live Q&A and voting on the resolutions. Our intention is to follow the normal AGM format. However, in a break with the past, we'll also make the presentations available on our website, as we believe that it may be more convenient for some members to view the AGM at a time of their choosing. So to be clear, I'll present the Chair's report, including an update on the changes being made at the Board. Colin will take you through the key elements of the year in the CEO report, and the Chair of the Board Remuneration and Culture Committee will update you on the priorities of this committee. After that, the Board will address questions that members have submitted in advance. Of course, there may be additional questions that arise today, so we have arranged for you to be able to submit them online using the instructions set out on page 4 of the Annual Members Review. But if you need a reminder of the access process, it's up on the screen now. Then we ask those of you who have not already voted on the resolutions to do so. So I can confirm that in accordance with the Society's rules, this meeting is quorate with a minimum of 10 members in attendance. I can also confirm that all the directors are in attendance, either here in the room with me or virtually. Here in the room are Colin Field, our Chief Executive, John Penberthy-Smith, Chief Commercial Officer, Maurice Mills, Chief Financial Officer, Clive Moore, Chief Risk Officer, and Anthony Bush, IT Director, and a number of our other colleagues. The other directors in attendance are Jenny Ashmore, Senior Independent Director and Vice Chair, Robin Litton, Chair of Audit Committee, David Rendell, Chair of the Risk Committee, Jazz Sagu, Neil Holden, Barbara Anderson, and Gary Barr. Our audit partner, Ariel Grossberg from BDO, is also in attendance virtually. So as I said earlier, we'll follow the normal agenda with an opportunity for questions a little later, and then the formal voting on the resolutions placed before you. If there are any questions that we're not able to get to today, then they will be responded to directly following the AGM and the answers provided on our website alongside the AGM recordings. I can confirm there are no apologies for the meeting. So, on behalf of the Board, may I welcome you again to our 173rd Annual General Meeting, and I hope you find the new format useful. Last year we attempted a hybrid version of the AGM, and the feedback was that it did not work as well as for members as we would have liked, both for those who attended in person and those online. We're also very aware that it's not going to be convenient for all members to attend an AGM in the middle of a weekday afternoon. So, to address both issues, we decided to make the AGM virtual and to make the proceedings available on our website subsequently. I hope this approach makes it possible for those members who wish to attend in real time and ask questions and vote on the day to do so, and for other members to review the AGM at a time convenient to them. Please give us feedback by email on this approach or anything else so that we can continue to improve and meet the requirements of you, our members. At last year's AGM, I acknowledged the impact of COVID and how it accelerated the trend to hybrid working practices. I also raised the potential impact that inflation and the war in Ukraine was likely to have on all of us. Since then, we've seen a very significant increase in official interest rates, 2 new prime ministers, a disastrous Truss administration mini-budget, and a squeeze on living standards. The policy reversal of the very low interest rates, quantitative easing and COVID-related forbearance that had been in place since the global financial crisis has been abrupt. In trying to get inflation under control from the 10% plus levels in February, the Bank of England has pushed up official interest rates from 0.1% in December 21 to 4.25% today. A change of that magnitude in interest rates, and one that has been largely mirrored in Europe and the US, is bound to have a big impact on business conditions and the economy. Recently, we've seen the failure of several US regional banks that can be attributed directly to poor governance and the impact of higher interest rates. Last month, Credit Suisse Bank, a venerable if troubled organisation, was swallowed up by its main competitor at the behest of the Swiss authorities. Bank failures of this type are reminiscent of the 2008 financial crisis. However, it is reassuring that prompt action was taken by the authorities in addressing these issues and the depositors were fully protected. The regulatory environment was significantly strengthened following the global financial crisis, with better regulation, higher capital standards, and a clear playbook for regulators when banks get into difficulty. And I am sure that the financial system is more resilient for this. Some commentators are forecasting that inflation has peaked and interest rates may be close to peaking too. This may be true, but it seems reasonable to assume that there will be other examples of stress yet to emerge before the full impact of the reversal of zero interest rate policy has worked through the economy. I am pleased to say, however, that your building society is in a good position, whatever the market conditions prove to be. As I reported to you last year, 2021 was a record financial performance for the society in its 172-year history, and 2022 was another record performance. For some years now, we've had the strategic objective to build profitability and grow our capital base, and everyone in the society has pulled together to make that happen. Profit before tax was $17.5 million in 2022, far stronger than any other year in our long history. Profit after tax was $14.7 million, which is over double the performance in 2021. Strong profitability allowed the society to build up its capital, and we are very close to achieving our target of 15% for Core Equity Tier 1. Building up our capital base helps us to support loan growth and enhance the strength and security of the society for the benefit of all stakeholders. New lending in 2022 was over $230 million, and we ended the year with more than $1 billion of loans to customers. Of course, there's more to do, but your society is in good shape to face whatever interesting times the economic environment has for us. The financial performance is important, but is only part of the story. I'm delighted to say that your society continues to have excellent scores for customer satisfaction and colleague engagement. We do not get everything right all the time, but we relentlessly measure our customer satisfaction scores and hope to be quick to acknowledge any mistakes and fast to remedy them. The society has developed all aspects of its lending capability, ranging from product development, business development, underwriting, and service and support over a number of years. That has been the primary factor that has enabled the society to return to growth in both lending and capital strength. The service that we provide to savings members has always been strong, but the foundations have been enhanced, which has been recognised by our members and the broader financial industry. We've been lucky to receive a number of awards during 2022, and again that is a testament to the hard work put in by all of my colleagues over a number of years. Your society has achieved this through a continuing focus on improvement. It has consistently sought to improve its capabilities, attracting and developing talented people, while never losing sight of its purpose: to improve the financial well-being of its members, something that we now talk about as money happiness. In more recent years, the Society has embraced its role within the broader community, and in 2022 it launched 2 new initiatives. The provision of the Community Link in Saffron Walden, which has been used by over 50 charities, community groups and not-for-profits since it opened in February last year, and being accepted into the Alternative Reclaim Fund, the culmination of a project led by branch colleagues that reunited many people with funds that they had lost touch with, whilst transferring dormant funds, which now means the Saffron Community Fund has around £500,000 invested to provide ongoing support for good causes for years to come. Historically, building societies were pioneering in improving people's lives within the community. They enabled their members to work together to help each other to achieve home ownership. Whilst now societies are considered to be mainstream, at their inception they were really quite radical. The role of a mutual society will evolve in the future, and it's an exciting time for the Society and the Board to develop what that looks like for the Saffron Building Society. Although our lifestyles have changed a lot since the Society was founded, many of the problems that motivated the birth of the mutual sector remain. Today, young people still struggle to afford their own homes, and people of all ages must adapt and plan their finances to address a complex working life and a concept of retirement that is very different to that which was considered the norm just 2 generations ago. There's no quick fix for the challenges of home ownership for the young and retirement planning for the rest of us. However, our strategic objective is to help current and future members to achieve their financial goals. In the past AGMs, I've talked about the renewal process at the board. David Rendell and Robin Litton joined the board in 2020 and 2021, and we've continued the process of change in 2022. I would like to acknowledge and thank several directors who are leaving the Society following today's AGM, and welcome those who have recently joined us. Trevor Slater joined us a few years ago as Chief Financial Officer and retired in January 2023. Trevor brought years of experience, a deep knowledge of financial services, and a real commitment to the mutual sector. He has consistently made an important contribution to the board and has championed the capital and financial performance agenda. And on behalf of the board and all his colleagues at the Saffron, we wish Trevor a long and happy retirement. Following an external and internal search process, I'm pleased to announce that Trevor has been replaced by Maurice Mills as CFO. Maurice, who has been with the Society for 6 years and most recently served as Deputy CFO. 2 long-serving non-exec directors also retire at today's AGM, having served their full 9-year term. Neil Holden and Gary Barr have served the Society during a very challenging 9-year period. A number of legacy issues have been resolved that now place the Society in a strong position to move forward regardless of the market environment. And at a personal level, I'd like to thank them for their support, for the enormous contribution they've made to the board. Jenny Ashmore, Senior Independent Director and Vice Chair, remains on the board for another year and provides continuity among the non-exec directors. I'm also delighted to bring to your attention the appointment in September 2022 of Jazz Sagu to the board. Jazz is already bringing his 30 years' experience in financial services and his experience on other boards to the benefit of the Saffron. He is a very welcome addition to our board. Following an external search, we have appointed Barbara Anderson to the board and as the next chair. Barbara is a very experienced non-exec director, committee and board chair with a wealth of relevant experience, and we are very fortunate to be able to attract somebody of this calibre to our board. As you may have already seen, Barbara was recently recognised in the Sunday Times NED Awards for her role as a NED at the Smart Data Communication Company. I have no doubt that Barbara will provide outstanding leadership at board level, and I am delighted that she's joined the board. Barbara will take over from me as chair following today's AGM. Now I will pass over to Colin, who will go through the detail of the exceptional performance of your society in 2022. Colin.